One of Wall Street's biggest bears just capitulated, and with S&P 500 stocks getting upgraded across the board this earnings season, it comes down to one big thing that we all need to be looking at. What is it? It's going to be Nvidia earnings this Wednesday. In today's video, we take a look at what the options market expects, what we think could be happening next, and of course, the opportunities out there in the markets right now. Crypto going absolutely bonkers over the last 24 hours with anticipation of an Ethereum ETF just around the corner. But there's so much going on and a lot of opportunities for all of us. So let's get into stocks, commodities, and cryptos right now together. Well, welcome back everyone to The Daily Show. My name is Tom, and as always, we're going through the latest macro data, lead indicators, and everything that matters to all of us for market investing and trading. If you've ever scratched your head saying, why is market doing this and how do I better understand it? Then remember, subscribe and smash that bell icon as we bring simplicity to the overcomplicated when it comes to these markets daily. So let's start off with the WTF moment of the day, and that's got to be Morgan Stanley's Mike Wilson giving up on his bear calls, and he no longer sees a big stock market drop. The best caller of the market in 2022 and arguably one of the worst for 23-24 has given up on his bearish stance. And that takes us to a point now where many people will be starting to say, well, I need to get fearful as when all the bears have gone, of course, I need to start really questioning what I'm doing in this market. And according to things such as the Euphoria meter here, which has taken a mixture of bullish sentiment and forward PE, we're starting to get into some pretty high levels. Now, what I always look at is the bubble meter, and we'll talk about this more on the show moving forward, so make sure to subscribe to that. And what I'll be discussing is the idea that everyone's going to be talking about bubbles moving forward if they already haven't been. And that is one of the biggest things that we'll be looking for, because when everyone believes it's a bubble, markets tend to push a little bit higher. When people disappear and say the bubble, there is no bubble, it's all good, which is already starting to appear as well, that's when we need to be most careful. So really leverage is what you're going to be looking for right now, to stay away from that, to really condense yourself and to understand that when we have utilities, gold, copper, and all of these markets around the world doing the best, it usually means you're in what we call late cycle. Here's another way of looking at the AAII sentiment survey report, and you'll notice that it turned negative recently in terms of the spread, and it's gone back to being bullish. I think that's okay, and I think at the moment the markets are, of course, still rallying, and we'll show you why when we look at the average bull market run. Here are some things, though, to start to be a little bit careful of. Investors are striking gold all over, quite literally. We love gold at the moment. And investors have rarely had it this good, with prices of everything from homes to stocks to cryptocurrencies soaring across the world. So basically, everyone's feeling great. And as you'll see in some of the stats that we're bringing up, euphoria is starting to run wild with people overspending. And of course, that leading into delinquencies starting to go up as well. What about the S&P 500 though? Is it a breadth-filled market? Well, you can see here Grant Hawkridge has a great chart showing us 2018, 2021, 23 and 24 highs, and how the market has been making, relatively speaking, a pretty aggressive trend. 73.4% of stocks above their 2018 highs. Obviously, there are some sick ones there. 62 above their 2023 December highs, which is pretty strong, I think. And 2021, a little bit less. And then, of course, 2024, we're only at 34.2. So what does this tell us? Well, it tells us there are plenty of stocks that could still be coming up if the markets are running. And basically, this is going to be a mid-cap run and a small-cap run. One of our favorite investors and traders, Stanley Druckenmiller, recently went pretty heavily into Russell 2000 calls, basically showing that his position there is looking towards a broad-based rally if it is going to happen, although he did dump quite a lot of position of Nvidia and AI stocks, calling them like a semi-bubble for now. Let's have a look at some of the worrying signs. Things like delinquencies. Serious delinquent 90-plus day loans are starting to rise big time. They're now above where we were in 2019, and they're not quite at GFC highs or anything, but you want to start to see this kind of moderate a little bit. Not great to see delinquencies going up so much. And of course, credit card delinquencies also on the rise. So the Fed is playing a very dangerous game right now. And as we know, some people are struggling. However, when we look at more younger generations are planning to vacation internationally while also planning to go for longer and spend more, it looks like we're starting to see some pretty big movements here in the Gen Z and millennial run. basically most people seem to be looking towards spending more. And this is showing up in many reads at the moment, including on cruise ships, which are starting to see some pretty big inflows into them and not as much decline as you would think considering the high interest rates. So what about market recessions, the word that no one really cares about? Well, I tend to believe that the next recession isn't really going to be a recession. It could be, unfortunately, a bit of a depression. And that's because we've got that US inverted yield curve that's been going on for so long. But as you can see, most people are now saying there cannot be a recession anymore. And we're seeing Goldman Sachs basically take it down to their expectation of a recession over the next year being 15%. Now, if this keeps going lower, as you might know if you've ever gone through your stats, basically speaking, when they've got it really, really low, and in these kind of areas in here, that's when you want to be most concerned. Something around 15, 20% coming off a new bull market rally, forward PE is getting really, really high. This is actually when you want to start thinking about recession. Not when everyone thinks it, because of course that doesn't work out most of the time, or it's already here. It's mostly when people don't think it's there. So something that's pretty interesting, and I think that it shows that most of these publications and most reads are going to say no recession over the next 1 to 2 years. I'm starting to think, of course, back end of 25, 26, 27, somewhere around there, when we uninvert the yield curve, things could get very, very nasty fairly quickly. You can see here Mike Zaccardi over on X sharing a couple of nice charts. This one is the S&P 500 mega caps to large cap ratio. So basically the 100 versus the S&P 500. It looks like we've got a breakout of some of the largest caps, actually the megas. And the megas are starting to push. Now, of course, most of these megas are cash flow positive. So this is very good businesses in high interest rate environments. And similar to the 90s, could we be seeing an AI style led crazy run where markets start to pull these types of ratios? Something to watch. And of course, you may want to put this on your charts by comparing the S&P 100 versus 500 or 400 overall. 500 is what you want to compare. Dow theory, Dow industrials, Dow transportations. So what have we got here? Well, we don't have the agreements of one of the oldest systems that most people look at, which is to see the transportations starting to run, and they're running with the market also making new all-time highs. Now, I've argued that maybe the Dow theory isn't as good as it used to be, but we still should be paying attention to it. So that's a little bit of a negative for the markets right now. Some positives for the market, obviously, if we saw the Russell 2000 break out of this 208, 212 level on the IWM, then we should be looking at a fairly nice run for the Russell, and that also could be playing catch up. Of course, Druckenmiller has placed his bets on this one recently with those big positions in IWM and actual sell downs in NVIDIA into this earnings season. Will he be correct? I'd never bet against the Druck, but we'll see whether he's correct. S&P 500 top down, but net up volume versus the bottom. You can see here again, we're seeing cumulative net up volume starting to increase, which is, again, pretty positive. It's kind of pushing this market up higher. Financial conditions, as we know, are softening. We already made a bit of a joke the other day about the idea that the Federal Reserve and all of the little talkers were coming out to have a chat about how the economy was going. And as we found, financial conditions recently have been quite, let's say, lackadaisical. So that's leading into some strength due to, of course, people taking on more debt and therefore the economy actually expanding. You can see here Goldman Sachs expects the GDP to actually increase, and therefore we might not be getting any rate cuts anytime soon. Now, because we're not necessarily getting any rate cuts, or at least minuscule amounts of rate cuts in the US, that means that we need to start thinking again, what happens when we have over 2% CPI for extended period of time? Well, it tends to lead into commodities, gold, which have both been going this year. And of course, emerging markets become very, very interesting. And you can see here that there are some other pretty interesting leads, I guess, from what's been going on around the world. And we're starting to see things like China obviously improve, the FTSE, the UK 100, the Aussie 200. All of these markets have started to go as we've been kind of, looking at and seeing on the price charts for quite some time. So why could it be a point where even if the market sells off, it's still going to rally up? Well, history will tell you that we have a certain length that a market usually goes for. And the good times keep rolling for a while to suck everyone in, but more importantly, to suck in that leverage trade. And we haven't really seen the huge leverage trade get into the markets yet. But remember, as of April, now we're in May, we're still not really even near the median duration for a bull run. So there's a good chance that there's still more to go. And of course, most stats are pointing towards the, let's say, next year being pretty good on the markets into an election. And then possibly we start to really question whether the 10-year average is going to be that good. In fact, with forward PEs and PEs being where they are right now in the markets, if you'd invested and held for 10 years, at least historically, there's not that actual good a chance that you'll make good returns. In fact, we're looking at a return of 0% over the next 10 years if you were to hold the whole way through. Market timing might be actually very important over the next coming years. Do you agree, though? In the comments down below, I'd be interested to see what you guys think. What's going on with the market sector rotation? Well, the last 24 hours, some things happened that were strange. First up, we saw JP Morgan leading the downward trade, and we saw banks both go down across the board. Obviously, we want banks to lead if we're seeing an expanding market, as that shows us debt is looking pretty good. Gold has done well over the last 5 days. Semiconductors obviously coming back into focus thanks to Nvidia's earnings. And then we've had our metals trade, tech, across the board, basically all the markets that we've been discussing. Utilities has been incredible as well if you look at its last 1 to 2 month overall rotation. So let's jump into the charts, and we'll start off here with the S&P 500. And as we kind of thought, 53.25, the call resistance was a little bit much for the market to be able to get through. And it's really going to take Nvidia, I think, to get through this particular zone. So as we see on this stop sign here, this is a resistance. We expect sideways to even a little bit of downward turn here. But then if Nvidia does come out with good earnings, we're pretty much looking towards the 5,400 level. Why? Because as we push through and we have what we call positive gamma situation, the markets will continue to gravitate towards the next major options level. And we'll look at that in just a moment, but let's just quickly check out the futures market. So here are the one-day expected moves based on the options market. If we do end up going to the bullish side, 53.41, 52.74 on the low end. And what the market's doing is it's saying that 68% of the time it will stay within this range. That can be kind of useful as a small little res and support zone, but as I mentioned, 53.25 will be the most important bull level to see broken up. Now, from the sell end, as we did in our live stream, we kind of went through and we said, well, where are the key levels? So I thought that we would see the most amount of bears sit around this area here. The bulls, I kind of believe, sit on 5,300 temporarily. So there's actually a very tight range between the bears and the bulls here. If the market manages to push down, though, we've got this level of demand, which sits around 52.50. And then underneath that, we've got that 5,200, which just so happens to also be a major anchored VWAP. So a lot of you guys like VWAP, obviously for good reason. And there's a major anchored VWAP, there's a major put support, there's a major all sort of thing going on at the 5,200 and just underneath level. So let's say the markets did end up going down. I could see something like this occurring. And then maybe here is where you actually see the more major buy. So Nvidia will really dictate this one a lot though, but let's have a look at the options. As you can see at the 5,300 level, we have some pretty extreme zones. Actually over the next 24 hours, 5,310 and 5,300 as of the Wednesday trade are becoming now the new call resistance zones. So while they were 53.25, if the market is able to hold above 53.10 over the next 24 hours or even the next 48 hours hold above that 5,300 level, it's going to mean hedging has to occur. And that hedging can push the market up to 5,400 zone. Why 5,400? Well, as you'll notice, there are a lot of calls sitting there as we go past just the next couple of days. From the perspective of where we switch everything, it's going to be under that major support. So really, if we go back to the charts here for a moment, you're going to need it underneath this lower low, 52.84. That will then push 52.50, etc., etc. So we've got the major levels, and we know that right now, if a bear's going to come in, it's right around here. This is pretty much where the bear's going to come in. What about CTAs? They're holding firm. So commodity trade advisors, often considered systematic funds, they are basically looking at neutrality at this point. They're not moving up nor down very much. Nvidia coming into the big earnings, as we can see, we're in a positive gamma style environment above 950, and 1,000 is the major strike. Now, it doesn't really matter what particular chart you're looking at. 1,000 is the major strike, and if we hold above 950, there's going to need to be some hedging. So this earnings season is going to be massive for Nvidia. It's going to move hundreds of billions of dollars, and it's going to be a big one. Over the last 24 hours, some things happened on GameStop that I thought were interesting. 20 put got kind of removed a little bit. We obviously know this was the major level. Now the major level on the bottom end is 15, although there were some extra calls in there. So we pushed above 20. We're sitting now at $23, so we managed to hold that 20 zone. And if we manage to get through 25, it could create another squeeze momentum. So I think 25 something that you might want to put on your charts if you are following such a wild trade such as GameStop. Tesla, same thing, 170 puts, 180 calls. We're stuck in the middle of that range. We have got a base of 170. Underneath that, we can move into negative gamma situation. Above 180, we're starting to push some really nice positives. Above 185, market should be in full-fledged momentum squeeze at that point. So some levels to watch. So we talk about earnings season, and the reason why is because this is a wild earnings season. Even though it may not expect it, you may not think it in the charts. We've had some massive beats and beat on both. And if you miss on both, you're getting hit big. So in fact, 1 day after and 5 day afters, if you are missing on both, you are holding low and not just instantly returning back up. And if you're beating on both, then of course, yes, you are increasing, but maybe not at an extreme rate. So clearly the market does have some pretty high expectations. The energy sector seems to be disappointing the most. Maybe there was too higher expectations coming into this, but as we know, it really comes back down to Nvidia and the sentiment here for the AI trade. So after the close on Wednesday, guys, we'll be doing a special report on this channel. We'll be covering off, of course, what's happening in the earnings call as well, which will be interesting. And do remember, it's going to be a plus minus 9 to 10% move. That's hundreds of billions of dollars. That is absolutely massive. And I expect it to push the S&P 500 and NASDAQ in a big way. Let's jump into the charts now. VIX might actually increase. So, of course, VIX sitting down here in the low 12s. Maybe we'll see a little bit of a jolt on that in Wednesday. I wouldn't be surprised. From the options world in bonds, we're seeing a small uptick, not enough to write home about yet. But as we know, that can tell us things are starting to look a little bit scary on the markets. Not quite yet there. And we did get a bit of a rejection here from one of our favorite, which is home construction. So is it over? Is home construction's big run over and therefore the bull over? Not just yet, but we are watching that one. US 2-year yields remain trapped between the low of 4.718 and 5%. So basically, we don't know what yields want to do next. And treasuries have been just kind of readjusting towards the upside. So as we thought, a 61.8 pullback of the low to the high for long-term treasury holders. It's a pretty good zone from a TA-based perspective, and things have been improving from there, but they're not going to move wildly until we see yields obviously get trashed back down. What about copper? Well, I'm a huge fan of copper. Obviously, I do have longer-term targets on it, although I do think it's reached kind of like a zone here where as a day trader or swing trader, I could see people taking some profits. We first saw this over here when we reported on it last week. Of course, copper went for a crazy squeeze above, but I do think it's in consolidation time. What do you think, though, in the comments? Do you reckon copper's going to consolidate here for a little period? It's kind of similar to gold and silver as well, both running amazingly, but then everyone talking about them, which, hey, don't get me wrong, I'm loving gold and silver, but when everyone talks about them so much on socials, usually that means the initial run's over, goes in consolidation, everyone forgets about it, then it runs again. That's pretty much the rinse and repeat of these markets. US dollar drops down to a perfect level for us to see buyers come back in. They are coming a little bit. Obviously, no new low. Remember, we need a new low for the bears to take back control of this market. And we're looking at how does it react to the 20 daily moving average and the 105 level. Currency markets certainly heating up here with central banks across the board making some big moves. Gold, as we mentioned, red stop sign. We're starting to get to that kind of more extended zone. You can see here a bit of a rejection wick. I could see gold coming back to something like the daily 20 moving average, 23.52, then hopefully returning back up. So still really bullish on gold, but obviously I could see the small time frame starting to weaken. Silver, our stronger of the two. As we know, silver-gold ratio. Check out some of our other videos. We've been loving silver more than gold in recent weeks because it's been kicking some ass. And I still think silver is going to go to $50, but it's going to take a little while. So 2 steps forward, 1 step back. Not maybe, even though it looks really extended, I would say that it's just going to move with gold. This could be like a tweezer top. So watch if it makes a new low under 30.957. Maybe we enter back to 29.64. which is going to hit the daily 20 moving average. So again, both those markets probably syncing up fairly well together. US oil, the conundrum. So of course, we have been bullish on oil from the Great Bull Zone, but we keep failing. So what that means is we failed to get through the daily 20 moving average, which we know is a super important moving average to break through. So that's where, we're going to see scale-ins and market kind of, getting towards the more bullish side. I'm not a fan of the market doing this because, as people rightfully point out, this could be all getting towards another short off. And, I'm way more bullish on metals than I am on oil. And part of it has got to do with politics. There's a lot of external factors that press in on oil this year. And I do feel like, while OPEC's not going to change anything about barrel output, if not anything, that they'll actually squeeze it harder. There are some very external factors going on. So we want to see the Great Bull Zone getting some demand again. Basically, it's almost there right now, sitting around 78.50 a barrel will be the interesting point. And I'd like to see it break the 20 moving average. If it does, fantastic, probably moving higher, moving back up to 84 a barrel. For now, stuck in a range. Be very careful. If it comes back down to these 77s again and closes, I'd say it's moving downtown and we could be at like 72 a barrel pretty quickly. So we have to be very adaptable here on the oil trade. Let's move over to Tesla. Tesla unable to break through 180 as we saw with the options before, 180, 185. Break through that, get a real squeeze onto 200. So we like it here for the bulls. The bulls, I think, are in partial control, but to get it through 180 will be a big deal. GameStop, $20 is holding. So as we mentioned over the last 24 hours, we expected this to hold. Good, it did. Now we kind of look towards 25 plus. If 25 plus is broken, that can create a kind of self-fulfilling squeeze. And of course, it did drop off big time. So what I usually think about these kind of stocks is that they go up massive, they come down, everyone loses faith, they sit for a few days, they get a secondary squeeze that's usually less than the other, and people take some profit because they remember this one over here. So we'll see how it ends up playing out. Obviously, people tell me in the chat that I don't understand and there's more powerful forces at work, but I would say that $80 isn't treating you too well right now, unfortunately. So just remember, people are greedy, they do strange things. So people will take profit when they see damn good profit in their portfolios. What about Hood? Well, as we reported on our live show, this is one of my favorites of the week, and it's done 3.73%. Now, I don't like IPOs. When IPOs come out, they lose, and they go up for like 3 days, they dump, they come back 18 months later. That's the rule of the IPOs in the American market. Really loved last week's weekly close. Obviously, a good earnings report, some strength there across the board with the stuff that's going on in crypto, and maybe even a new all-time high coming with the stuff that's going on, obviously, in the finance world with these cards that are coming out. There's some good things to like about Hood, and price action looks like it wants to break out. And you've got to remember, Hood was once, at pretty extreme prices, maybe not 64, but even the IPO price was 36. So there's some decent runway there. What do you think about Hood? Let me know. Nvidia now, 947. So obviously this stock is going to be between two prices, 888 and a 950 plus break to get us 1,000. So these levels are going to be major. 1,000 is a major zone for Nvidia, a huge call resistance pop. And of course, the 888 level, the most traded zone, big support, big demand zone. So I expect kind of like buyers to come in around here and push it up. And if it gets above here, to quickly gravitate towards 1,000. So Nvidia is stuck in the questionable land because it's right at these reses. And that's what often happens into an earnings report. It will be at a critical resistance or a critical support. So it's one to watch. Intel also one to watch. Massive capitulation. Starts to show signs of a turnaround. Another one that I could see kind of having what we call a dead cap bounce in it. Obviously not a great stock, but yeah, there's movement towards gap fills at 35 and things like that are starting to look pretty good. Chinese market now, everyone's jumped on board that bandwagon. Maybe it's time for a pullback, and I think it probably is. Didn't quite hit the 20,000. I could see people taking profits around here, and I could see a bit of a pullback before it resumes its strength. Now, obviously, I am a bull this market, but you've got to be realistic. That was an incredible run. It overexerted itself, and I could see it now pulling back. First up, 19,000. Second up, somewhere around 18.2 would be where I'd expect this market to find the next bulls and hopefully see some good action towards that. But yeah, Chinese market down today after an incredible run. Aussie market doing well thanks to metals, thanks to a little bit of a pickup in energy, and of course financials across the board doing well. So Aussie market, UK market, that's the FTSE, they're both doing quite nicely. US 2K, just coiling, waiting for the next big move. I'd say that's going to be an NVIDIA runner, thanks to some of the stocks that are actually big in the Russell 2K. And you can see here the NASDAQ is still floating around that resistance with anticipation of NVIDIA really being the major thing it holds up with. You can see I've got a star here, which is even worse than a stop sign. Basically, that tells me that this is an exhausted run. And although that's not an instantaneous sell or anything, it just says, be cautious and start thinking about pullbacks being more likely. Something like 18.2 could be a good zone to target in, and that's going to meet with many of those S&P 500 levels. Now let's move over to crypto. So as we thought, exceptionally good run, breaks that massive 67K level, instantly runs all the way to 71.5, 72. This is exactly what you expect from Bitcoin and crypto. It moves so quickly once it gets through. You just have to go straight momentum to the next level. So we're at res. I expect it to do a little bit of consolidation here. Why? Mostly Ethereum. So if we have a look at Ethereum's price action, it went straight into the resistance after everyone got hyped on the ETF. Now, I'm a fan of Ethereum and Bitcoin. They're both my favorites in terms of crypto because I'm a bit of a boomer and from that perspective, and I just like the old ones. I know what they kind of are, and that's good enough for me. But in this case, yeah, I do think everything is good for Ethereum to have a pretty significant run. I would say it's really behind Bitcoin overall, and this is an exceptionally big move. So usually what happens is it has a little bit of a breather and then recovers from that point. I am bullish on it, and I wouldn't be necessarily terrified at this point, but you can see why maybe a day trader or any kind of trader would be taking some profit around this zone. Why not? It's hit the res, it's hit this level. That's an exceptionally big candle. Now it pitters off and then should come back. So things are looking pretty good for the crypto traders out there. Obviously, the resurgence of exchange traded funds, that's a positive. And in general, I just think that things like the US dollar might be actually starting to weaken. That's a good thing for Ethereum. And with the GameStop saga and everything else, people are clearly getting more euphoric. And what does that usually affect? Crypto markets, hyper stocks, those types of things. I'm not sure if it's going to be hyper stocks this time around, but I definitely think crypto benefits from the euphoria. So let's take a look at the week ahead in terms of what we've got information-wise for the US. Not too much. We've got unemployment, flash services PMI, and then revised UOM consumer sentiment. As we know, every single Fed board member you can ever think of is coming out. We've got some meeting minutes coming on Wednesday as well. But realistically, I think it's all about NVIDIA. So maybe the meeting minutes will move the markets. In general, I'd say it's all about NVIDIA. So remember, subscribe, smash that bell icon, guys, and follow us on some of the other socials if you're interested. You can also check out some of our courses where I go through some of the methods that I use to find opportunities in markets. And I'm glad to see so many of you doing so well with them. Thanks so much. We'll see you in the next one. Bye for now.